Well, hello, beautiful people. This is Jessica Jones with Taurus Financial Solutions, coming to you today with a quick chat on brokerage accounts. This is not investment advice at all. If you want individualized advice, then we need to speak one-on-one. But I just wanted to kind of go over some different topics that I've been talking about with clients lately. So with brokerage accounts, and I've done videos before on how much to save for retirement and how much you should be putting away and these sort of things. As I've said before, you need to aim for at least 10 to 15% of your annual income to be put away. But where you put it is kind of up to you. You can do a combination of before tax money and after tax money, right? Which is what I would suggest. Obviously, if you are being matched with a 401k at your employer, then you definitely want to at least hit their max match with them, because that's like free money. So definitely do that. But other than that, you have some options with brokerage accounts or with any accounts really on the tax qualification of it. If you're just doing an individual account, meaning not a retirement account, not an IRA, not a Roth, then you are going to be subject to capital gains. There's a lot of talk about capital gains now because of the proposed tax changes regarding capital gains and how they're wanting to tax capital gains higher than they are now, depending on your income. So that's still to be determined. But the point of the matter is that if you are making money, you're going to pay capital gains. So it's funny, I have clients who are annoyed that they have to pay the capital gains, and I'm like, well, would you rather have your account gone down and you didn't have any earnings? I mean, capital gains are a good thing because that means you're making money, right? So just keep that in perspective. It's really good to have that after tax money because yeah, you're paying money on the gains, right? But you've already paid taxes on the principal. So ideally, if you're making money, if you're paying capital gains, that means you're making money, right? So you got to take that, just keep that in perspective. I always recommend having a balance of before tax money and after tax money, meaning before tax money, meaning your IRAs, your 401ks, and then your after tax money, meaning just your regular brokerage accounts, your Roth IRAs, even though Roths are still tax preferential, you're not paying taxes on the gains, right? And you've already paid taxes on the principal. But that's why there's limits to how much you can put in there, because otherwise all of my money would be in a Roth. But you can't do that really. There's ways around it, but we'll go on in a different video. Anyway, my point is, the more you put away, the better. So however you feel like you need to do it, if you need the tax write-off now, then go ahead and max out your IRA. Definitely max out your 401k, because the 401k has a lot higher contribution limits than just an IRA does. If you still qualify to put in for a Roth, I always recommend if you can put into your Roth, put into your Roth. And aside from that, and having an emergency fund, of course, too, start a brokerage account, just start putting money away, even if it's a little bit every month, because that really adds up over time, and that compounded interest over the long term is gonna really work well for you in retirement. The other thing too with just an individual account is that if you do need to get to it, you can. Whereas, your retirement accounts, if you're under age 59 and a half, you're gonna have a 10% penalty if you pull a bunch of it out, except under certain circumstances. But just be aware of that too, because it gives you some more accessibility while still being able to put away money for retirement or for more shorter term goals, like kind of mid-term goals, maybe 5-year, 10-year goals that you don't need totally liquid like you do your emergency fund, but that'll give you some opportunity for some growth and to hopefully definitely keep up with inflation at least, okay, and give you some more accessibility. So anyway, capital gains, yeah, you're paying taxes, but that means you're making money. So it's not all bad. Taxes are pretty good, actually, if you think about it, because that means you're actually making money. All right. Thank you, as always, for listening. If you have questions, call me, email me, taurusfinancialsolutions.net. I appreciate you all for listening. Have a wonderful day. Bye.